Hey everybody, today is Tuesday. It's the 21st of May 2013, and this is Brian Shannon speaking from alphatrends.net. I'll be out of town for the rest of the week and wanted to leave you with a video just taking a look at where we are in these markets and what the potential risks are if we do begin to pull back. Again, we're innocent until proven guilty. We are quite stretched to the upside, obviously, and if we take a look actually at a 30-minute time frame, that goes back to that mid-April low. So we're going to look at basically since this little low right in here, where we broke below that 50-day moving average, which was advancing, as we know. This is basically the channel that we've been in since that low. And we're up near the top end of that channel. The midpoint of this channel really is best defined by that 5-day moving average in this trend line here. If we lose this level here, I would say, the risk is that if we break below one of these higher lows and we have a beautiful pattern, we can just clear this off. We can see this beautiful pattern of higher highs and higher lows, prior levels of resistance acting as support in certain areas. But if we break below 166, then I think it would be reasonable to expect we would get down towards about 165 area. And that's approximately where we would run into this trend line from the April low as well. Now, if that was to fail to hold, then what you want to do is start looking at some Fibonacci levels from whatever this high may be. Now, I'm not calling for any type of pullback. I should certainly hope we get a giant pullback while I'm gone, and really flush this market out and make things easier for me when I come back, because I don't really like trading a pullback within a primary uptrend. That's me selfishly speaking. But I think it's reasonable to think that maybe we'll come down towards about this trend line near about 165 this week, and you just have to monitor the health of each individual stock and manage risk on a stock by stock basis. The Nasdaq is in a similar type of real nice uptrend here. That if we look at prior levels of resistance that have the potential for support, I think that this general area here near about 73.70 is going to be an important level. And if we break down and head below the pattern of higher highs, and I'm sorry, below a declining 5-day moving average, then I would say that you want to start putting Fibonacci on there. You can see that I drew that trend line not off of this low right here, but instead off of this level, because it connects in the most places, and that really is what represents the essence of this trend. So if this trend line was to break, then we would head down towards this 73 and a quarter area, and then if that's to fail to hold, I think that you want to look at prior levels of resistance as well, and then put again those Fibonacci levels on there. The Russell 2000 is in a real nice uptrend as well. This represents the most recent legs since it gapped higher, and off of the April lows, we have another trend line that could be drawn to look like this, and that's certainly a possibility. At some point we could get down to that level, but for now I think we want to focus first on this level here at about 98.60, and then below that in this little band here of about 97 and a half up to 97.75. So really this would be the level. What we could also do, and I meant to do this earlier, was to go back and take a volume weighted average price since that April low, which right now is at about 161 in the S&P 500. For the Nasdaq, since this low here, we've got 71.40 as the volume weighted average price. So right to that gap point, which is kind of interesting. For the Russell 2000, our volume weighted average price, we could take it off of this level here and say at about 94 in change. So this, again, if we break below one level of support, and the first one being about 98.60, and we hold below it, then that 5-day moving average begins to turn lower. I would think that it's likely we'll get a little bit deeper pullback, but we had that happen before, and then all bets are off when it goes back to the upside. So be aware that the primary trend is higher, and any pullback, I think that the opportunities on the short side will be more for day traders, not really from a swing trade perspective. But you do what's right for you and your account. Now, the semiconductors have had a big run, and over the last week and a half, really, they've kind of turned a little bit more neutral here, with a important area of support setting up at about $38.20. So if this group breaks below the 38.20, I think that would likely lead to more weakness in the rest of the sectors. So that's something to keep an eye on. If we take a look at, we could look at a trend line like that, and that's about the 20-day moving average. We could head down towards about $37.80 to $38 a share. So again, that would be that 20-day moving average. You see, we're just kind of hammering away at this 10-day moving average. It is holding a support though, so that's the important thing to recognize. And the financials have made it to our long-standing target of $20 a share. We've got a couple of trend lines in here that we can measure off of as well. The second one, or I'm sorry, the first one will be the more significant level, and that kind of lines up a little bit with this prior little area of support at $19.70-ish. The area before that, though, is going to be found at the 5-day moving average and this $19.90 area, really. If we break below and hold below 19.90, then I would expect it's highly likely to get 19.70. And if that fails to hold, then again, start looking at things like a 20-day moving average or the 10-day moving average. Start looking at Fibonacci levels. But these are just still, if we get these pullbacks, then they are still just pullbacks within a primary trend. For now, the trend remains higher. It is innocent till proven guilty, just like gold is still in a downtrend. I saw a lot of talk about a double bottom in here yesterday. Absolutely nonsense at this point to try to say that this is a double bottom. We would know, the measurement of a double bottom, this would be point A right here, B up in here, and point C. What happens in a double bottom is we break a trend line, and then once we get above point B, we take the height of that and then add it to the break point, or about 160-ish. That's when, at this point, is when we would know we had a double bottom. But we've got a declining 10, 20, 50, 100, 150, 200-day moving average. Gold is in a downtrend. It's no different than Apple when it was starting to break over here, that people were calling everything a double bottom in Apple. Ooh, double bottom. Ooh, another double bottom. Double bottom. No, it's not double bottoms until well after the fact. And the fact is, gold is in a downtrend. It's in a long-term downtrend right now. We had a strong bounce, and guess what? We have lower highs and lower lows. We're below a 10, 20, 30, 40-week moving average, and I would not be surprised for gold to head down towards 115, 120 in the course of this year at some point. It doesn't mean there won't be bounces, but why on earth would you try to catch these bounces and capture them with these awful gaps? It just doesn't make sense to trade gold. I just don't get it. I don't see why people are so attracted to it. Anyways, let's talk about Apple for a moment, because what Apple's doing right now is trying to hold near this 50-day moving average, and we know the 50-day moving average right now is 435.35, so we're slightly above that. You can see that the 10-day moving average has trapped it here the last 2 days, and when we look at a 30-minute time frame, for instance, again, we've got this prior support area that broke down, and if we back this 30-minute time frame up, we can see the transitions above and below. So it's possible that we're right here at this point in Apple, but we've still got that 5-day moving average declining, and we've still got this potential. I would say that 452 is similar to this 420 area over here. It might blast right through it again. We'll see, but so far it's good to see that we're stabilizing near this prior resistance at 435, and that's holding a support. But it's too early to say that it's a buy. Perhaps above 447-ish with a stop down near 435, you could get a bounce. But again, the primary trend remains lower. It's guilty till proven innocent, just like the trend in Tesla remains innocent till proven guilty. If you look at it, now I talk a lot about volume and only price pays. And for the indexes, I'm consistent that you can basically, I think, ignore the volume in the indices on most days. But on individual stocks, the relationship is a little bit more important. That is, we're up on big volume and lighter volume on this pullback. If we take a look at even some measurements such as the volume weighted average price since this event, that is since the gap higher. So since the earnings, the average price is 83.74. So the buyers remain in control. Now, what we're starting to see when we zoom into a 10-minute time frame is we broke a little support in here today, this little band of support, and now it's struggling with the 5-day moving average flattening out. So it has the potential for a deeper pullback pullback here. But if it gets back up above that $90 level, I think that this is the type of stock that could go on to 120, 110, 120. So Tesla, I think, is really meant for very short-term traders or options traders in here. The risks are going to be too high because we can get some massive volatility at any point in here. I would say that we will, the volume this week will begin to slow down towards Thursday and Friday. It will get lighter as more people head out for the long weekend. And I personally will be back on Tuesday of next week. So I will not be talking to you then. Have a good rest of the week here trading and enjoy the long weekend. Be safe and talk to you later. Thank you.